Hey, it's Bryan Schmidt over at Cross Country Mortgage. Hope you're having a great start to your week. Hey, we had a lot of self-employed borrowers last week that we helped, and unfortunately couldn't help. So I thought I'd do this video and share a little bit about what you can do as a self-employed borrower looking to finance real estate. So I'll give you two examples. I had one client last week that was adamant. I make $180,000 a year. I should be able to be approved for this, no problem. And of course, we needed his 2018 and 2019 tax returns. When we got them, he's right. He made $180,000 of W-2 income that he paid himself from his business. So he thought he was doing everything great. The problem is that he had a $549,000 carry forward loss from other business years that offsets that $180,000. So in the eyes of the mortgage world underwriting, basically what we are looking at is that 180 minus that 540 for him. So he really had a $360,000 net loss of income for the calendar year of 2019. And again, it was very similar in the calendar year of 2018. So that was one instance last week. The other instance was, I had a gentleman who owns a contracting business. He pays himself a W-2 salary of about, give or take, $3,000 a month, and he owns 9 pieces of real estate. And he had been denied by multiple lenders. We sat down and we dissected everything. We looked at how he documented his income on his tax return, and he didn't have those carry forward losses, but he had a lot of expenses related to his real estate holdings. So when we calculated everything, he actually had just enough income to be able to refinance his primary residence, but not the rental properties until we finish the refinance of the primary mortgage. What I want you to understand as a self-employed borrower is that your income is not what you think it is. I guarantee you that when you think that you're making money as a self-employed borrower, you will not see the same number when we review and actually calculate your income for mortgage underwriting purposes. So the number one thing that you can do as a self-employed business owner related to debt financing, like a mortgage or a car loan or anything that's not related to your business, basically any loan that you're going to personally guarantee, where they're going to ask for your social security number and not your FEIN number, your tax ID number for your business. If it's a personally guaranteed loan, I want you to understand there's 3 things you need to do. Number one, you have to have an outstanding CPA that understands what your business goals are. If your CPA does not ask you if you're buying real estate or if you're selling real estate or if you are looking to make other investments in your business and it needs to include debt financing of some sort, if your accountant is not asking you those questions, you're working with the wrong accountant. You need to have somebody that's consultative, that's going to help you with the tax strategy that makes sense. If you need introductions to a great CPA, I'm happy to make that introduction for you. But my point being, if you have the objective of buying a investment property, as an example, and you file your 2020 tax return the same way you did in 2019, if there's no planning or preparation in advance for that, you will more than likely be denied for that mortgage, and that will put your investment plans on hold. So number one, you need a great CPA. You need a great person that understands what's happening in your business and what your goals are. Your goal may not be just to reduce your taxes, because if you pay nothing in real or income taxes, you have no income, which means you can't be approved for any financing in most cases. The second thing that I think that is super important is you need to be planning this in advance. Don't wait until December to figure out what you're going to do in 2021. Don't wait until October. I would say sit down and look at your business plan for September for 2021 in September of 2020. Be proactive. From October 15th to December 31st, that's probably one of the slowest times of the year for an accounting firm to sit down with you and do some tax planning and get prepared for what you're going to do to first close out the current calendar year and get prepared for the upcoming calendar year to make sure that your goals are achieved. And third is work with a great lender that knows what we're talking about. The last thing that you want to do is to walk into the local bank branch or the local credit union branch and tell them that you make $180,000 like the first client I mentioned, and then hand over your tax returns. They're not going to know what to do with them. They're not experts at this. They're order takers. It's like going to McDonald's to get a cheeseburger. You're going to get it the same way every single time. If you give them a tax return that they've never seen before, they are going to have a very, very, very difficult time understanding what needs to happen, and what is a proper course of action for you to take to reach your goal. So number 3, work with somebody that knows what the heck they're doing. So overall, have a great CPA that knows what they're doing. Plan in advance and make sure that you have a lender that knows what they're doing. You need to have experts on your team, not amateurs. If you've got questions about any of this, I'm happy to answer anything that I possibly can. I'm happy to sit down and give you some ideas about how you can reach your goals if you're confused or just don't know where to start. If you want to invest in real estate, if you want to finance real estate, sell something, buy something, I can help with lots of that. So give me a call. My direct number in the office is 847-603-4778.